almost just in time. Oh, can you
Hey,
hear
what's
me?
up, man?
Oh yeah,
Yeah, yeah.
now I got you. I was just like completing your onboarding itself. Pretty smooth, by the way, I have to say.
Cool.
Yep. And I think currently, by the way, that's not how you usually start the stream, but whatever. But yeah, my name is Adonis. I'm really happy to meet you. Ash, would you want to give like a brief intro of yourself as well, and then we can get into it.
Yeah, yeah. Thanks for having me. Name's Ash, founder of Axal. Super simple goal, just best place on earth to grow wealth. And I think stable coins and a lot of what we're seeing with like policy these days and especially what we're building makes that possible. Like Axel is just the best place to go and park dollars and start earning on them. We allocate funds across DeFi lending markets. I've been doing this full time for like 3 years, dropped out of Harvard to start doing it. Yeah, never had a normal job. This is all I've done.
Awesome, man. Never have a normal job. That's basically what I did as well back in the day. So I'm really bullish on that. I was actually just trying to like use the platform itself. So very sleek UI UX, by the way. Definitely 10 on 10 appreciated. I think the minimum deposit currently is like $2. I did not try like the bank route. I went like deposit from like Arbitrum. And then basically, it is pretty smooth. By the way, I can see you guys are like integrated with like Gauntlet, Steakhouse, Morpho, a couple of others as well. So are you guys planning to add any others as well, or are these like the like how are you deciding on these positions? Like, okay, this is where we want to allocate like the capital to.
Yeah, absolutely. I mean, we do a ton of risk analysis. So this is like TBL, liquidations, like history and how long the pool has been around. Of course, who the curators are, and we have relationships with each of them. But the goal is not to be confined to any set of pools or even set of chains. Wherever there is good yield that meets like the art and science portion of it, we absolutely want to allocate. We have some new ones coming out soon. All of those vaults that you just mentioned are on base. We finished building out cross-chain support, so we'll be able to do any 4626 vault on any EVM compatible chain or any chain that supports 7702 and 4337. So like gas sponsorship and smart accounts. We want to do fancier yield strats as well. Like imagine if you could do basic looping and get 15 to 20% on a very low risk pool. It's definitely a different risk class, but it's something that people should have the ability to do in one click on their phones. And then after that, we want to look into RWAs, which I'm sure we can talk about more later. But yield on gold, over collateralized lending against your stocks, like all of that.
Mhm. Oh wait, so you guys would be integrating like lending and borrowing as well?
Yeah. So we'd probably still be on the supply side for a long time. But
Mhm.
imagine if there was like probably by
Enough.
these same
Yeah.
creators, like a Robinhood L2
Mhm.
gauntlet managed vault where the collateral is like S&P 500, and then
Mhm.
people are borrowing against that position. That's where it gets really exciting to me. Same thing on the just investing in new asset classes side. Like today, if you live in the U.S., it's hard to maybe invest in Brazilian bonds or Indian bonds or whatever else you might want to do. Vice versa, if you're abroad, it's hard to invest in U.S. real estate maybe. Tokenization solves all of these things. So the goal is for, on the theme of Axel being a wealth app, anything that people view as a long-term investment, we want to have here. And what we have today is just this new form of long-term investing, which I would argue is DeFi lending, soon to be just all lending. But yeah, we want to do a bunch.
So if I roll back like 3 years, like how do you decide to like go all in on building Axel? And the reason I'm asking that is because if I remember 3 years ago, holy shit, what was it? 2022, this is like peak bear market at that point of time, right? Like nobody's like, nobody's touching anything. People are just like, I think there's like GMX, there's Unibot and all of these trading bots, but nobody's building out like infra at like a lending and borrowing level. Like all of this is like too boring at that point of time. So like, how do you decide to like, you know what, I'm going to take a bet on this?
Yeah. Well, 3 years ago, we weren't doing it either. Like I had dropped out to do treasury management automation. Like we built a wrapper around a Gnosis safe, and it was just like groups can manage funds better if they don't have to constantly sign stuff. So like delegated signing, basic versions of that. Nobody wanted it. Like we pitched every CFO in crypto, and they were okay with the spreadsheet or manually signing the transactions that they had to do because it's a bear market, because there's just not that many people or that much utility in it. Pivoted through a bunch of different ideas, all focused around like automation, some agent stuff, some intense stuff if people are familiar with that. Like intents are basically just like verifiable outsourcing. That's how I like to think about it. Across is a good example. Uniswap X is a good example. And about a year ago, after trying all these things and struggling to find something that was actually a 0 to 1 for people, like legitimately an improvement in how they go about their lives. Like to your point, there's all these trading apps that are out there. Intense-based trading or agent-based trading today is not at a point where it's a 10x improvement or a 0 to 1 on somebody's life. I would argue that like mobile app based lending to 6 to 10% DeFi lending market vaults that are always T-bills plus a couple, that's extremely useful. that's like a 0 to 1. So about a year ago, we saw the maturity of these markets. We saw better regulation. We saw institutions coming in, significant enough capital where you could build a business, like not like 100K in a pool, and the second you bring in 50K, rates plummet kind of thing, like where there's just enough diversity and liquidity. But yeah, ever since a year ago, we went all in on this. And the decision to drop out was like pretty easy. It was just like, this is way more fun than what I'm doing at school. There's an opportunity to work with incredible people and just go all in on an idea. And I'd always wanted to start something. I just didn't know what the idea was. And obviously we pivoted since then, but it was a pretty clear decision.
Sounds amazing, man. And like when I look at this, one thing that I'm reminded by is, of course, the Aave app that's on my phone. But yeah, the problem there is that I'm still on the wait list. So Aave, if you're listening to this, I'm still on the wait list, guys. Right? But of course, Axel does not have one. Like you can just go ahead and just use it. So that's definitely a big plus. Um, how do you see like competing against the giants in this case? And there doesn't need to be like a very definitive answer just yet, because as you said, you guys started out like a year ago. Probably there are a lot of things that you guys still are looking to figure out or still are looking to improve upon. But when you look at something like this, like what are the strings that you're pulling at, right? Because when we are seeing as like in front end consumers, I'm not the person who's built this app, but when you're looking at yourself versus somebody who's promising like a higher yield, like what are the trade-offs that they're looking at? What is happening exactly on the back end that one platform is able to offer me a higher yield versus another one is probably making bigger promises of security, let's just say.
Yeah, it's a good question. There's like a lot of moving parts, but at the end of the day, it comes down to yield. Like, what is the easiest way to get risk adjusted yield? Aave is great, like blue chip lending protocol, arguably like pivotal in any of this getting big to begin with. At the same time, you're locked into one provider, and that's how I view even like going straight to Morpho directly, or arguably straight to one of these curators directly. Like, rates are always changing, the market is always changing. There's always something new. I was just looking over the weekend, and you could have done like USDAI PTs on Pendle, getting like 15-16% for like relatively similar risk to probably what people are taking with Axal today, with just these over collateralized blue chip lending protocols. Like, the theme here, and this is why how I view Axal versus like the Aave app, let's say, diversify across many different sources, because when rates are changing, you can always ensure you're in the best, cater to what you care about. Like, Aave is very much all eggs in one basket, and the rates are below T-bills for the most part. Our rates are also compressed, and we're working on rolling out some newer yield strategies to get them back up. But at the same time, like, Aave is all like yield from this one lending market. The reason why we like diversifying is because you have all these different curators doing different things. You have different collateral types that are allowed. That's the innovation in my head of Morpho or Euler or any of these like infrastructure for vaults as a service. Like, anyone can go and build a vault. So that's how I view it. Axal is an all-seeing eye. No matter what chain you want to go to, what collateral, what protocol types, even real-world assets, like, we can handle it. A lot of that comes down to the architecture. Like, we use trusted execution environments. We're not building new vaults. That allows us to do cross-chain signing across different formats. Even if it's not a vault, it could be like invest in yield-bearing stable like Athena, and we just have to give our users exposure to that token. I know the Kiln team is doing like RWA, KYC vaults, and other permission-based structures, just new standards. This stuff's always going to happen. Every year there's going to be something new. So that's how I view the way that you keep ahead. It's like, nobody can necessarily guarantee a number, but you can guarantee diversity across many different sources, plus risk management automations that people care about. So great company, great team. I think Axal almost subsumes it. We could just have Aave vaults on Axal if we wanted to. The yields just are not that great right now, but yeah.
Very, very interesting. And what I'm hearing is that, of course, you guys would be kind of like an aggregator in this particular regard, right? So I'm pretty sure you guys are always looking for like more sources of yield, looking for more things to kind of offer to somebody who is basically a user of Axel. You just mentioned like gold in particular. Probably there are like perp dexes that are now offering like uranium perps and whatnot. It's getting a little bit crazy out there when it comes to like asset class investment. What new assets can people expect, like besides gold and silver, let's just say, or anything interesting that you guys have been cooking recently?
Yeah, we won't be able to do this anytime soon, but definitely on the Q2, Q3 roadmaps. I get really excited about small business lending. Like, this is something that historically only banks or like the high up portions of the ivory tower or institutions were capable of doing. Like, you go back 1,000 years, who's able to lend out to a farmer? It's probably like the king or whoever's like managing this stuff. The beauty of what you're seeing with tokenization is anybody can go and invest in small businesses that can get a loan, let's say, easier than they could by going to a bank. And you're already seeing this. There's one company that we're huge fans of called Dualmint. You can invest in boring businesses, and that's a lot of their marketing. Like, invest in the biggest laundromat chain in Vietnam, and maybe you can get 15 to 20% APY. They just have a vault. Of course, there's off-chain stuff involved, so this is not like a pure in my head, the purest form of like DeFi is like an over collateralized Bitcoin only Aave market, let's say, for lending, where it's fully on chain and you can see everything because there is off chain Oracle sources for price feeds, let's say. But that's extremely exciting. Like I want to go invest in something like that, or maybe you could invest in a GPU farm. USD AI maybe allows you to do something like that. Invest in real estate, like a state protocol in Arbitrum allows you to invest in like Airbnbs in Texas kind of thing. So I think that's the theme. Like every asset is getting tokenized. All these yield opportunities are getting tokenized. Anyone can go and invest in whatever preferences they have. So that's what I get really excited about. Like it's a very democratizing technology. And again, to your point, Axal aggregates, but we also automatically rebalance. Like imagine you have your paycheck going straight into Axal, and your mandate is like 20% of my money needs to be in deep blue chip DeFi, 10% of my money in gold plus gold yield, 5% in Airbnbs, 5% in this, whatever it might be. It really is like private wealth in your pocket. And then not to even mention like private credit and venture, which are things that also have historically been gatekept, but now you get gatekept, but now you can go and invest in them. So that's the goal. There's probably 10 asset classes on earth that fit this thesis of like somebody views it as a long-term investment: bonds, real estate, DeFi lending, Bitcoin itself, gold, that like a couple others. That's really it. Axel wants to be the home for anything that's like a long-term kind of investment.
And I look at your marketing, and your marketing's like really, really Gen Z focused, which I really love because we need more of that, especially in crypto. I don't think a lot of us are showing our faces on here as much as I would like for them to do that. So your marketing, like when are you the guy who's running the marketing as well, or do you guys have like somebody for marketing?
Well, it's a small team. Like we're all doing everything. It's maybe like 6 or 7, but yeah, we got an external guy who comes in and films some videos, but we're doing our own videos as well, but trying to work on it.
No, those are really good videos. Those are actually like funny videos, to be very honest. Do you guys also post on like TikTok, or is it only like X at this point?
No. Frankly, like all that we had done historically was X, like most crypto companies, and we realized it's just not where our audience is. Like the audience for Axel and crypto natives could absolutely use this. Like we have all of our treasury in Axel. I'm all of my money in Axel, kind of thing, despite knowing everything about it, just because it's helpful. Like it's too much work to constantly track APYs and rebalance as yields change, especially given current market conditions. But the target audience is definitely Web 2.5, if not Web 2. Think of like the friend that you have who just booked a trip to Japan on like credit card points because he just got like the bonus kind of thing, or they're on the r/fire subreddit. They have a million fintech apps that they're just farming. Like that type of person. Like you're probably not a college student, but you're at least a couple years out, 20 to 40 years old, tech forward, work in finance or tech or some sort of like the word Bitcoin or crypto does not scare you. I think that's what we've also learned. Like we do the funny skits and everything. I think it's good. It makes this stuff more relatable, but no consumer is stupid. Everybody does diligence. And during that diligence process, it's our job to be honest, but also to be very clear in how we describe stuff. I can't sell to grandma just yet. At some point, I will be able to, and that's where a lot of that's like the institutional work and what you're seeing on Washington. Like a lot of how I pitch Axel to totally like regular people is just like the banks are pocketing your yield. They're going and lending it out. They're under collateralized loans. They're not even guaranteed to pay it back necessarily. Axel just gives you that power, like lend directly to people. They're over collateralized, so your principal is guaranteed. Billions of dollars are flowing through this bipartisan legislation in Washington. Like this is here to say Circle is regulated the same way as a bank. Like USDC is just a digital dollar. Like lines like that where you're kind of talking about the tech very much at a high level, but you're also emphasizing a lot of these proof points around it. But
Very, very interesting. And are you guys like, I would not say that you guys would be affected that much by AI agents, except if like you basically get like arbitrage bots up and running that are like coming to Axel and then moving out of Axel. But maybe in another way, you guys may be using AI on like the internal side to basically like write code, or like run some systems of the company. Or would you consider yourself like, because it's like a small team, so it's easier for you guys to like make adjustments and stuff. Are you like actively using AI as well? Do you see that as something that is impacting your company culture, even though as you mentioned it's like a small company, but still?
oh, obviously, like completely. And even the biggest companies, like I was at a dinner yesterday with like some of the OpenSea team and like
Mhm.
some people in banking, even like these antiquated industries, and they're all very excited about like AI writes like 50% plus of their code is what they're saying. On our end, it's like we review absolutely everything. So of course we're using Cursor and Claude and like the Figma MCP is bad, but I discovered something a few days ago that was even better at translating like designs to code. Like we use all of it. On the actual yield side, it gets fun. We're not doing anything code related yet. Just think like greedy algorithms, like standard CS related. Like I want to optimize my yield within this risk bracket. So like if Axel has 10 pools, let's say 3 low risk, 3 medium, like four that are a little bit more frontier. Maybe we want to maximize yield up to an extent within each of those risk tranches. It's simple CS. Like there's just like algorithms that people have done. Down the line, absolutely. Like everybody should have a personal model running in the TE that knows everything about them that they're willing to like let it know about. Maybe it knows that Ash is like saving up for a car and his time horizon to get that car is this and his risk tolerance is this. So, okay, great. We'll give him 50% of his portfolio in Bitcoin plus Bitcoin yield, 20% in like a higher yield DeFi strat, 5% in T-bills, just a hedge kind of thing, right? Like that's magical. And that's a lot of where our architecture lets you do it. It's like user funds are never consolidated. It's always in your wallet. You always have access to it. You can even have Twitter feeds or like we thought a lot about circuit breakers as well, like an agent that's monitoring like poly market odds for federal funds rate going down. And like, oh, T-bills are going to go to shit. We should probably auto rebalance somewhere else before they start to go down, kind of thing. Like, it's a very magical future. It is just like a quant in your pocket, a private wealth advisor in your pocket.
Very interesting, man. And I really like how you chose the example of a car. Fingers crossed, like aspiring Porsche 911 GT3 RS one. So very specific one, but
I'm in New York, so not a subway until I die. Probably we'll see.
oh, bro, I can't imagine, but it's all right. I mean, bro, SF and New York is basically like the crypto capitals of the world, especially with all the hirings and everything that's happening within like the stablecoin and payment space. Definitely sure that that is something that you guys would be impacted by as well. Plus, the VC interest is like super high with you guys as well. I would also like to add, like Ash, like for a lot of kids who are just starting out, maybe they're not even 18 at this point of time, they want to get into building. They're like confused, should they go into crypto, like building the financial rails sounds really interesting. They may be doing college. You're somebody who basically took a bet. I don't know how much of that decision was supported by your parents or by your loved ones, but it seems to have worked out well for you in on a long enough time horizon. What advice would you give to somebody like that?
Yeah, I mean, like I always you just gotta follow your gut. Like I don't know, like everybody's at different points in their lives. Like I live with one guy who's a banker, and then one guy who I actually started the company with. But at the time, and even now, his risk tolerance is just not at the level that it needs to be in a crypto startup. Let's say. So like everybody's at their own point in life. Don't compare yourself to others. Just like trust your gut. Like if you really like put a gun to your head and you're like, what do I want to do right now? The answer is usually pretty clear. Like when it comes to work and like what you actually care about. Like the answer should not just be like I want to lie in bed all day. It's like okay maybe, but like what do you actually want to do? And for me, even during college, it was like, I really want to do something that impacts a lot of people at scale. Like the answer wasn't even like make a ton of money. It was just like, I think this is very correlated with that. It just, I want to do something that's like really fucking cool and good for the world. And if we pivoted a ton, like the idea that I had at the start was not what I'm married to today, but the knowing that I was starting to go down a path where I could make that a reality with the little push, pretty big pushes, honestly, of like getting into this accelerator that A16Z did, back then that like absolute idol. It's like I never would have, these are people I see on Twitter or I see online. I never would have thought I could be at all in the proximity of that. Like that's game changing. So I'd argue in this day and age, anybody can do anything. Just go and put yourself out there. Like we have this is a small example, but we have an engineer who doesn't really tweet, and he started tweeting recently over the past week. And he was shit talking like AWS's time series database or something. He has like 10 followers, like nothing big. And then the head of this fucking time series database replied to his tweet yesterday. And he was just like, holy fuck, like how did he? So I think that's the theme. Like it is always possible. You're getting in your head, just go and fucking do what you want to do. I think that's like what I constantly try to tell people.
That is very true. That is very true. And Ash, thank you so much for your time today, man. I know it's like super. You have like a pretty solid and busy day as well. Thank you so much for hopping out of the stream. It was a pleasure. For anybody who is looking to use Axel, what is the best way for them to find you guys?
Yeah, it's so easy. The first purchase that I made before we had any money was ax.al. Albania has like a TLD, which I didn't even know, but we recently bought axel.com as well, so you can just go there. And then, no, yeah, follow us on Instagram. It's Get Axel on all socials, GETAXAL. But Twitter is pretty funny. Instagram has all the skits of me making fun of myself. But yeah, and I'm happy to we reply to DMs and everything all the time.
Awesome. That is very interesting, man. Thank you so much, Ash.